Good evening, ladies and gentlemen. Thank you so much for joining us here for the 10th edition of the State Bank of India Conclave. We at CNBC TV 18 are particularly proud that we've been part of this effort and this endeavor for the past decade, and I personally have been doing the CEO panel for the past decade, so it's great to be back here. And it's great to actually be closing out 2023 here at the SBI Conclave, a year, as all of our previous speakers have very clearly articulated, has been a good year for India in many ways. It's been a good year as far as macros are concerned. It's been a great year for the banking sector. It's been a particularly resilient year for other sectors, including, of course, sectors like steel, cement. Consumption story has continued to look good. But more importantly, the question that we now have to face is what happens in 2024 and beyond. Will we continue to enjoy the kind of sweet spot that we found ourselves in 2023, and more importantly, what do we do to build on the momentum that has already been gained over the last few years? How do we leverage on the advantages that we currently enjoy? We've got, to quote Mr. Joshi, a deadly combination of speakers here on this panel, so I'm going to try and elicit as much as we possibly can from our eminent speakers here. But before we talk about India of tomorrow, I would like to address the India of today, and there are many current issues to address before we look into the future and look into our crystal ball to see where India could possibly be positioned. So, Mr. Khara, as the host, I'm going to start with you. Let's talk about the banking sector, because as we just heard from Mr. Joshi, it's been a great year. Not just a great year, it's perhaps been the best year in a decade for India's banking sector. Very robust, very strong credit growth, and of course NPA is not a problem at this point in time. He asked you to think big and to think bold. What could that mean?
Well, as far as the banking sector is concerned, it goes in sync with the overall macro. And if at all macro looks so promising, it's very natural on the part of banks also to act and think big and bold. It's not only, I would say that we get the encouragement because the kind of resilience which we have demonstrated in the last 1 year, or rather all through the pandemic, that's a reflection of the very sound policies which have been practiced and promoted by the regulatory environment and also by the Government of India. I think I would actually go back to the era when, the time period when the pandemic had hit the economy. Perhaps we as bankers were the most worried lot. And that is one of the reasons why we all took all the precautions and ensured that the balance sheet stays protected and strong. And I think the net result of that is that, and also the Government of India came out with the very practical policy in terms of ECLGS, which actually ensured that the employment should not get affected. And also at the same time, the bankers should have the courage to lend in such situations. And we have seen, when all that is behind us, the kind of assets which got built around the same time. The delinquencies were much lower, and we had a reasonable buffer available within the balance sheets to address the challenges. And I think I would attribute it to the fact that the government policies were quite clued on to what was happening on the ground, and even regulator was also very mindful of the ground realities. And that has helped the banking system to build the resilience in the most difficult times. And actually, going by that only, I would say that in this year, in this calendar year, we have seen the huge meltdown in US when it comes to the banking system. And it was essentially nothing but the interest rate risk which had got reflected in the US banking system. But over here in India, we stayed insulated. So that has further gave us the confidence that yes, we are into a strong territory and we are practicing sound policies. So I think this is something it augurs well in terms of how should we navigate the challenges which might really erupt on the global landscape. One, of course, is the fact that Indian economy to a greater extent is insulated from the global threats. almost about 85% of our GDP is domestic. And there's a huge demand, domestic demand is there, thanks to demography, thanks to the GDP growth which we are seeing. So demand is quite, it's quite strong, and we don't have the supply side challenges. And that is something which we have seen in terms of the inflation, the way RBI has acted throughout the year. We have seen that we stopped increasing interest rate much before the global central banks started, stopped increasing the
question now is, when do we start to see the cuts coming in?
Sorry?
When do we start to see the cuts coming in?
I think we are on a right trajectory because inflation is much within control, but we are very clearly aiming for just about 4% inflation. But I expect that maybe somewhere middle of the next calendar year we should get to see the reduction in interest rates.
Since we are talking about interest rates, sir, you've hiked deposit rates just today, Mr. Khara, by up to 50 basis points across different tenures. Is it because Ashish Chauhan is giving you a run for your money? I mean, what's led to this deposit rate hike?
No, it was actually, we always believe that we have to stay, we have to offer a fair deal to our depositors also. We don't want to compromise the interest, and as far as deposit is concerned, it has got a franchise value. As we are more than 200 years old, we have to take care of our depositors too. So that is the reason why we have done some calibration in terms of interest rates.
So is this going to be the trend? Because you have clearly kick-started it. Do we anticipate this to be the big trend now through 2024?
I don't think so. It will be the decision which will be taken by a bank, depending upon their individual positions. But yes, of course, we had some elbow room available, so that's the reason why we have done this.
Okay, I'll come back to the navigating of opportunities and challenges in just a second, but let me cut to today's opportunities and challenges as well. And Ashish, let's address the market movement. As an umpire, you cannot comment on the market movement, but what a great day it's turned out to be. Another record high as far as our markets are concerned. What does the story at the end of calendar year 2023 look like to you? The FPIs have returned, domestic participation has been very, very strong. What would you articulate that has been the big trigger, has been the big turning point as far as the equity story is concerned in this year, and more importantly, looking ahead?
Thanks. In a way, if you look back for the entire year, I think Nifty has returned almost 18%, still 2-3 days to go. There are other indexes which have returned 23, 40, and
Nifty Bank has done very well.
And
as
the
well.
small cap Nifty has returned 60%.
Yeah.
Right. So effectively, if you see why it has happened is also interesting. But if you look back previous year vis-a-vis this year, the interest rates were going up because inflation across the world had gone up because of the wars and supply chain disruptions and all. And that's where basically the year began. And somehow the FPIs were pulling the money out. And in some ways, few times I have said that this is the year where the circumstances did not take over Indian activities. Earlier, whenever the oil prices went up, we used to be in trouble. Interest rates abroad would go up, we would have FPIs taking money and markets will tank. This is the first time we didn't see that happening. Indian investor was investing increasingly larger amount every month. And that's why the Nifty and every other index kept on staying there. And then towards the end of the year, when the US started decreasing interest rates, and of course, there is a potential that it might go further down. That's why all the FPIs are back. There was also a China factor that China is going to slow down, which it did, and what its impact would be on the rest of the world. But I think, as Mr. Khara said, we have been slightly insulated from the world. On the other side, like today, you would have also seen another interesting statistics of India's current account deficit coming down to almost 0.1%.
Yes.
Because why did this happen is because our services and remittances have now gone much more than our imports of oil, electronics and gold, which were like three things we could not have stopped. And once you start going up on the export chain, there is nothing stopping you. That's how I see this. Finally, we are reaching a place where we are actually preparing for a takeoff.
preparing for a takeoff in 2024, and you believe that the groundwork has been laid. But, you know, since we're talking about, and I'll go into more details, but I want to talk about one significant inflection point that you expect or anticipate to see in 2024. The market is waiting for that. NSE IPO, are we likely to see that in 2024?
I don't know whether you've invited my regulator, but I wish.
Well, you wish, and that's certainly, as I said, something that people are looking forward to in 2024, but we'll talk in greater detail about what could be the move as far as the markets are concerned, and of course, capital market reforms in general. But Mr. Singh, let me address the issue. Power demand, again, holding up, very, very strong, double-digit growth. There are constraints, of course, on the coal side. The government, though, seems to be changing its stance a little bit on thermal capacity. And now the mood seems to be that, look, you need to add thermal capacity even as you go out there and add renewable energy. How would you sum up 2023? Your stock has done very well, up 80% for the year. How would you sum up the year, and more importantly, the priorities for 2024 and beyond?
Thank you. I think we have already heard in a lot of things that how the economy is doing, and we in the power sector, we always call that our frequency of the grid is the pulse of the economy. And how
strong is the pulse?
Yes. Yeah, I think it is, what we are making is that we are making it as stable as per the consumption. And you rightly said that we have recorded almost double-digit kind of growth, both in terms of the peak as well as in terms of energy. And I can assure that as the demand goes up again, rather than keep going up, we will make sure that the power supply is available, and it is affordable also along with that. So the reliable power and affordable power, I think that is one of the main objective. And I think we all know now that in the last few years only transition was being talked about, but in the last 2 years the security, energy security is paramount, and then only the transition can happen. So we have to use the resources whatever we are having, but then we will have to go towards transition as fast as possible, as far as sustainable. Let me, I think, clarify one thing here, take the opportunity to send the message. It's not a problem to have the coal-based plants, but I think how much is the utilization, that is how the emissions and the climate is really dependent on. So while we will require a lot of capacity to meet our peak requirement, but at the same time when we are going for the large capacity of the renewables, the PLF will start coming down. I think that's what it's. And we are working on all the fronts, whether it is coal-based, what you rightly said, but more aggressively on the solar, wind, and going forward for the new age fuels like the green hydrogen and the chemicals and such. So there has been work which is going on then how we can take the advantage of the circular economy, how we can capture the carbon dioxide and utilize the green hydrogen and make the green methanol, which is far better than go on bringing or the importing, I think, the hydrocarbons from outside. So it's one way of going towards the self-sufficiency.
You know, just to pick up on what Mr. Joshi said, he said that people sitting in this room, including people here on this panel, both representing the private sector as well as public sector, will be responsible to drive growth and will be responsible for the investment pickup. Now, given the power demand that you foresee today, as well as the visibility that you have on demand going forward, what should we expect in terms of capacity addition? What would that result in as far as CapEx spends are concerned, say, over the next 5 years?
Yeah, I think Dr. Joshi was very bang on, and he was very right that the corporate has to really follow. I think he is in the role of making policy and enabling environment, and we all have to really make sure that it is being implemented on the ground. As far as NTPC is concerned, we had been, our capex has been in the range of around 25,000 crore, kind of thing. Going forward, it is going to increase, and it is going to increase at least by 30–40%. And we have to reach, we have stated objective that by 2030 we will be adding on the renewable side 60 gigawatt. So today we are having 3.5 gigawatt which is commissioned. 7.5 gigawatt is under construction, so it's almost every month something capacity is getting commissioned, and another around 20 gigawatt which is in the different forms of the kind of developmental activity. So we have no doubt that we by 2030 we will be able to achieve 60 gigawatt rather before that, and we know that 1 megawatt is somewhere between 4 to 5 crores, so it's I think the math is very simple in that case, at least for the CNBC.
Yes, for CNBC and our viewers will do the calculation, but a 30 to 40% increase in capex is what you anticipate to be able to cater to the demand expectations. Mr. Acharya, let's talk about capacity and let's talk about demand as far as JSW Steel is concerned as well. You're going to be adding another 7 million tons, I believe, by FY25. Given where we find ourselves with the strength and the resilience that everybody is talking about, what's the kind of demand outlook you foresee? And more importantly, not just domestic demand, but also export demand. What's the outlook?
Yeah, so I think, India being the fastest economy, we are seeing a very strong growth momentum in India. And this will continue for, I think, about 2 decades. We call it the nation-building phase of the country. And during this time, structurally steel will be required. Usually steel demand accelerates at a faster pace during this, let's say, period, 1.5 to 2 times of the GDP. So in the last 2 years, if you look at the demand, the steel demand has grown by 13% the previous year, and this year it's growing at close to 15%. If India wants to be self-reliant in terms of steel, we need to add capacities just to make sure that we don't import steel. We therefore at JSW Steel are building capacities. Currently our capacity is about 28 million tons in India and 30 million tons globally. We plan to take our capacities up to about 50 million tons before the end of this decade. We see a strong momentum, maybe not 15%, but a 10% double-digit, 8 to 10% growth is something which is easily possible. And this would call for a capex, additional capex in excess of 100,000 crores.
Of 100,000 crores. What do you believe is driving this demand at this point in time, and especially as far as the export market is concerned, with China being, since that's a big factor that everyone has spoken of on this panel as well, with China being in the phase that it is going through at this point in time with an uncertain recovery underway, what is the opportunity that presents for Indian steelmakers like yourself and for India?
So I think India is lucky to be, as Mr. Khara rightly said, we are lucky to be a domestic dependent economy. So we see also about, I think typically 10 to 15% is the exports from India if you look at direct steel. But where the opportunity lies, I think India is going to, first of all, as a country, let's put it this way, that India's current capacity is about 170 million tons as we speak today. Our aim is to get to 300 million tons of capacity, and the production would be in the range of 250 million. Which is double of what it is today. Majority of this would be consumed in the domestic market. As we grow into the, I would say in the next 7 years, as you said, I would see more exports of engineering goods out of India and less export of direct steel. So if I were to see the ratio between India and China, we export about 1/10 engineering goods versus China. Now with this opportunity opening up, post the China +1, kind of a preference, I think India has a huge opportunity to grow this pie.
Well, speaking of opportunities and speaking about this China +1 specific advantage, Mr. Satsangi, let me address that question with you. Because HP has been a long-term investor in India. In fact, outside of the US, this is your largest employment base. You've got about more than 20% of your workforce here operating in India. You're now also a beneficiary of the government's PLI scheme. You applied for that and you've got it, and you're going to be building tablets and servers, etc. here in India. Stack up for us the opportunity that India presents from a domestic point of view, but more importantly from an export perspective as well, as we just heard there from Mr. Acharya.
Yeah, thanks. So probably when I was looking at the panel, I thought I'm the only odd man out from the tech side. So let me give the perspective, and I was really impressed.
You're at the center of it all. Technology is driving everything. You're at the center of it all.
Yeah, and when Dr. Joshi was giving his keynote, I was wondering, because he was talking of all tech, that how tech is going to help. And probably I think all of us should be proud Indian that how the technology is shaping. And one of the fundamental thing what India has done and achieved because of this growth, what we are seeing, is embedded because of the technology transformation. And I must say that one of the reasons why we are seeing such a strong, robust growth, while all the parameters are right, and there are a lot of things government has done right in terms of the policy, in terms of the infrastructure development, road transportation and all. But one thing which has stood very differently from the other market is the digital adoption. The way the government, the enterprises, the MSME, they have adopted the digital transformation has really shaped the future of this country. Today morning I was just going through some of the data, whether you look at the Aadhaar, UID or some of the Smart Tag and ONDC and all. I was amazed because we manage many of these critical infrastructure, and one thing which I wanted to highlight is the Aadhaar. With 1.3 billion Aadhaar, this thing, in 6 months, the Aadhaar has authenticated 53 billion transactions. Just imagine, that's a power of digital adoption, which is helping to fuel the growth of the economy and all. And surely the Honorable Prime Minister's vision about self-reliant India, Atmanirbhar Bharat and PLI is really fueling this growth further kind of thing. And you rightly mentioned the way we are seeing the PLI adoption, the tech industry is going to be the most beneficiary with PLI 1.0 and PLI 2.0. But more importantly, this time, the government is listening to the industry based on the PLI 1.0. There were certain gaps. And in PLI 2.0, when they wanted to launch, they have taken the input from the industry, what exactly is required so that we can put up front. And probably we feel that PLI 2.0 is going to be reshaping the entire India economy, and not only for the India consumption, but for the export-oriented growth. So what we heard from JWS or from NTPC chairman, sir, probably we are going to be seeing the same thing in the IT and technology side.
Well, that certainly is the hope, and that's certainly the aspiration that the government has as well. But, you know, let me ask you, since we're talking about big, bold bets, you made a big, bold bet on India in 2019. $500 million is your, investment plan for India. Given the demand, given the visibility, given the opportunities that you foresee, do you expect to up that significantly?
Yeah, so you are spot on in that thing. And first thing I wanted to correct, this quarter, we have become bigger than even US in terms of the head count. So today now for HPE, India is the largest in terms of manpower.
Wow.
Okay. And
that does deserve a round of applause.
Yeah. And also when you last time you interview our global CEO Antonio, he committed $500 million investment, and we are on track. And one of the key reason of this investment was that we wanted to bring the technology to the country. And we heard that today we are living in the AI world. And the AI age is what is starting from India, with our recent Honorable Prime Minister hosting the Global Partnership Summit, which was attended by almost 29 countries. And that's where it is fueling the growth kind of thing. And we feel that India is going to be the home for newer technology to come. While it has got both side kind of things, and we also see that how organizations and countries and governments are looking that it has to be ethical AI, that AI adoption needs to be done. But certainly AI is going to be transforming and bringing the next level of growth in the country.
Yes, AI certainly is going to be one of the big lead factors in shaping the future. But Mr. Bhoumik, let me address the issue with you as well in terms of trend spotting now. Given the momentum that we're already riding on, what would you say that we need to focus on? And more importantly, what will you be watching out for? What are those headline numbers that you're going to be watching out for?
I think a few things that we've been seeing for the last couple of years. We've all been amazed at the resilience that Indian corporates has shown through this significant headwinds that have been faced. And even as we were seeing significant upgrades to the ratings, and people were a bit skeptical about that, I think a lot of that has actually borne out. I think what we continue to watch is the way Indian corporates are taking advantage of the opportunities. Mr. Acharya talked about engineering opportunities, and we're actually seeing that in capital goods. as Indian entities have, I think, order backlogs up to the next 4 years, supplying transformers and other equipments for renewable capacities in the US. There are opportunities on the consumer side, not the staple part, but on the aspirational products where people want to upgrade themselves. Infrastructure, of course, would continue. Cement, steel, power, of course, is seeing a major transformation. I think this is indeed a good time. From a rating agency perspective, I suppose one of the things we would see from a policy, and we have very alert regulators, one of the things we would continue to like to see is balance sheets continue to be buffered up through counter-cyclical strength, so that whenever a downturn comes, or if an idiosyncratic event were to hit either through cyber frauds or governance issues, entities are better prepared. So we would like to see those buffers being even more strengthened.
You know, you said that this is indeed a good time for India. Let me go back to very recently, I think just about 2 days or 3 days ago, the chief economic advisor has basically said that rating agencies don't seem to acknowledge the fact that India has done actually very well and should in fact be changing their stance and their position on India. How do you react and respond to that?
I can't, I don't have a sort of a ringside position on that, because I don't sit in on the rating committees. I'm sure rating agencies are listening to this long and hard. And I think the criteria that they adopt is transparent and is well explained. But I think the bigger point is, if you look at the articulation that rating agencies are making at this point, I think it's become a lot more balanced, a lot more benign now. People understand the benefits that growth is bringing in, and all they want to see is that it's a narrow, limited point of the balance sheet of the government, whether that is going to adhere to a declared path, and whether that path is going to be sustained and confirmed.
You know, let's address the capital issue, and I'll get Mr. Bhoumik and Ashish, both of you, to comment on that as well. You talked about the return of FPIs, and of course we saw the domestic institutions coming in and stepping up even when the FPIs decided to retreat. But the many changes that have happened, and let's talk about the T+1 settlement change that is going to happen next year as well. You know, how do you see the changes that have happened in the capital markets, the derivative side? We are today the largest in the world. You know, as you look forward, from an India of tomorrow perspective, you know, shape out the capital market story for us and what you see both in terms of fund flows as well as in terms of reforms.
Interestingly, this year the raising of funds was around 10% lower than the previous years, largely because interest rates went up across and many companies did not raise funds for the first half broadly, and now this first calendar half, and now slowly they are coming back to the market. You can see that euphoria. So in some ways, today when we stand and look back, the year looks great because we are looking at like 18% returns on the large cap and 60% on small cap. But it's in a way, when the year started, it did not look that good. In terms of the India's capital market story, I think from 1992 onwards, the liberalization story, 94 is when NSE started working. And since then, Indian markets have been thought leaders and execution leaders across the world, not only in how do we process the transactions. We were the first successful automated markets in the world. After that, US, Europe, Japan, wherever you can think of, they became automated after us in 1994. NSE was pretty much the first public digital infrastructure of India. And that's India's even IT prowess. I still remember SOM coming to me those days also. And so India's IT prowess came out of NSE, literally. NSE was the first experiment of public digital infrastructure, which went to villages, to towns, and that's where India kind of developed all that usage. But having said that, today, in terms of corporate governance, despite whatever controversies that have been created, we are pretty much the top 5 markets in corporate governance. There is no similar market. Why I'm telling you this is, despite all our growth, recent times or past, we are still at 2,700 probably already, although it's a low frequency data, so probably we are already 3,000, 3,100 USD per capita income today. But there is no market at that number, at $2,500, $3,000 per capita, that is so vibrant. We are now the 4th largest market in terms of market capitalization in the world with like $4.25 trillion market cap. After US, China and Japan, although Bloomberg and everyone want us to believe that Hong Kong is a separate country, it stopped being separate country long back, right? But somehow agencies have tendency to give you all that stuff, right? So effectively, $4.25 trillion of market is basically an individual sitting in Jorhat or Dibrugarh or Srinagar, investing her hard-earned 1,000 rupees into a company working out of Salem. She's never going to visit that company, but she has complete confidence that her money will be not wasted, and when the profit comes, it will be given to her, that portion of that profit. And for me, that concept of capitalism has spread across, that participatory trust into unknown people investing in unknown people, like what I call, India has become a very trustful nation in the last 30 years since NSE's advent began. NSE, when it started, it was 4 lakh crore rupees market capitalization, total India's. Today, I have many companies with more than 4 lakh crore market cap. Today, India's market cap in rupee terms is now 3.5 crore rupees, more than 85 times in 30 years. Right? And those are the numbers, 8.35 crore investors. In fact, just to give you another stuff today, another interesting statistics, now UP has become larger in terms of number of investors compared to Gujarat. So first is Maharashtra, of course, with 1.5 crore.
UP has beaten Gujarat in terms of the number of investors.
So UP is now calling shots in many areas, but also in now stock markets. And so you can see the demographics are changing. People, I was in Uttarakhand a few days back, and I was checking out the number of investors coming from there, and it is the same proportion as the average Indian proportion in the stock markets. I could not have imagined that Uttarakhand has actually started participating. Why I'm telling you this is, India's public is now trusting India's entrepreneurs. Whoever is telling you whatever, please don't believe. People are putting their money, hard-earned money, into India's entrepreneurs, and I think that is the story of last 30 years. That will be the story for next 50 years.
Well, the true democratization of the Indian equity markets, that you believe is the story that will shape the future as well. But since we are talking about capital and we're talking about flows, many significant changes have happened, including India's inclusion in the emerging market bond index of JP Morgan. You know, what could that potentially lead to? Of course, with that move, an expected or an estimated $25 billion is expected to come in. But what will this lead to over the next few years if more inclusions were to follow?
I think our near-term view is that liquidity conditions will now start improving, partly elections, partly JP Morgan and other factors. So I think from a liquidity perspective, the supply would become more available, and so therefore we become a less constrained economy in terms of these resources being available to us. At the next level, I think we become more integrated in terms of disclosure requirements and governance expectations with the rest of the world in terms of disclosures and periodicity. So I think that's the next level of, and obviously our top 1,000 companies are already adhering to that. I think it would now start sinking into a larger base, and so therefore the pyramid sort of elevates itself base upwards.
Mr. Khara, let's talk about the road ahead. Now, there is a meeting with the Finance Minister on the 30th of December. I would imagine that that's stock taking about the year gone by as well as what the year ahead looks like. But outside of the next few months, what needs to be prioritized now from a banking sector's perspective? The unfinished reform agenda, for instance, on the Insolvency Code, there are amendments that have been sought, amendments that have been spoken about, discussed. You know, what should the road ahead look like now in terms of priorities from your perspective?
Well, I think one, of course, we have to support the growth initiative, and we are very clearly, there is a lot being talked about the private sector investment. So if I may say, from this forum, we have got a very clear visibility in terms of the fresh proposals coming in. What we have actually seen is that the private corporates, they had a lot of cash sitting in their balance sheet. First and foremost, the investment happened by deploying that cash. And now they have come to a stage where they have understood the growth opportunity which is there, and we are very much there to support their such initiatives so that the private capex should now take off. This is what our first priority is. And of course,
but we've been waiting for that takeoff. I mean, it's been, in the words of the Chief Economic Advisor, incipient signs of private capex picking up. When do we start to see robust signs of private capex?
In fact, that is what I'm saying, that, you know, until now we have seen that the investment has happened from the internal resources. As Mr. Gurdeep Singh also said that there is a huge capex lined up for the next financial year. And similarly, I would say that many other public sector entities have also lined up the capex for the next financial year. The way I look at it is that it is going to be a blend of both the public sector, government, and also the private sector, but we will get to see more private sector investment also coming from the banking system as well. So that is one priority. And second, of course, digital is something which has been one of the very forefront for all of us. And we have invested well in terms of upscaling ourselves as far as the digital capabilities are concerned. And of course, all said and done, the cyber is one area, cyber risk is one area which all of us need to really guard against, be it banking or non-banking entity, any entity, because today there is a huge dependence when it comes to the operations of any entity on the information system. So we have to guard against that. That is another very important priority for us. And I think the other area where we all need to work on is how to make the organization digital-driven organization in terms of leveraging analytics. So that is one of the other very core focus area for us, to understand the customer better and offer them the products which they are all looking for.
So if I can just focus on that, because that's the running theme as far as this panel is concerned, that a lot of the growth will be driven by technology and also the technology transformation that banks like yours and other companies will have to undergo. You know, how much are you investing in technology today, for instance? What do you foresee that to become over the next 5 years? What will that mean in terms of bank branch expansion? What will it mean in terms of workforce allocation, reallocation? You know, lay out for me what you envisage the next 5 years to mean and what technology will do for you.
Thanks to digital, today we are bank of our size, we have got almost about 88% of our transactions are digital. And 98% of the transactions are happening outside the branch. But if somebody asks me whether we don't need so many 22,400 branches, my answer is no. Because the kind of diversity of customer base whom we serve, we have to have the physical presence. And let me share with you, when it comes to financial sector, unless and until there is a physical location of an office in the far-flung area, the ability of a brand to get the confidence of the customer is rather very difficult. So I think from that point of view, after all, since we deal in a fiduciary capacity, we deal with the customer's money, our presence on ground makes a whole lot of difference. And also, having said that, I must also mention that the country needs a lot to invest in terms of financial literacy. And from that point of view, the public sector banks have done a great job all this while. But if you ask me whether we have completed that, I think still there is a room for improving that financial literacy. So I think to that extent, we will have a coexistence of digital as well as physical. So that's why phygital is going to be a reality for us, for all the banking system. Having said that, I must also mention that when it comes to what you mentioned, what will really engage us for the next 5 years? To my mind, there are many repetitive jobs which are being done at a bank. So I think the Gen AI is going to be the next big talk. We have started...
Next big talk or next big thing for the bank? Have you already started to incorporate?
We have already started working on it. So that is something. We actually started working with the analytics in a big way. And now we are moving towards the Gen AI. So I think in the next 5 years, we'll probably see that unfolding. And probably it will help us in addressing the customer's need. And also will probably shape up the way banks will be run in the days to come. So many of the repetitive jobs we will have, probably will get to see the distributed ledger very much in adoption going forward. We'll get to see Gen AI getting implemented in the banking system. and we will get to see the data-driven organization as far as the banks are concerned. So which will actually show up in terms of our ability to manage risk, ability to understand risk, ability to understand the customer's behavior, and also figure out the exceptions in no time. So which will also address part of the risks which are there in the digital. Even that will also get addressed in this whole process.
But speaking of risks and speaking of appetite, Mr. Joshi said that it is going to be a world where banks will have to collaborate with fintechs. You've of course got but given the fact that you aspire to be a much more digitally driven bank, could you look at M&A as far as fintechs are concerned? Would that be something that you would consider in the future?
See, actually, the way fintechs are grouped, they offer solution to a problem in particular, and also they are nimble-footed. So for entities like us, we have to marry the size with the agility, and I think with that can perhaps come if at all we collaborate with such fintechs and we consume their solutions, we pose problem to them and seek the solutions. And I think that is going to be the model. It has already started happening. It will further get strengthened in the days to come. And also, I would also like to mention, we as banks, we have to ensure that the whole ecosystem is secure, which also means that the partners in the network also are equally secure as we are.
Yeah.
We cannot afford to have any kind of a laxity on the part of any of the ecosystem partners. So which also means that it is the responsibility of a senior partner in this whole job to ensure that there is adoption of the security standards, which will actually keep the whole system secure.
Absolutely. And that is the role that you see yourself playing as well, but no M&A at this point in time.
M&A, that's why I said that M&A, if at all we do, then they become part of our entity.
Yeah.
As I was saying that, we need the nimble solutions, and nimble solutions will be possible if they're outside of SBI. if they stay where they are. But having said that, I must also mention that we at State Bank of India, when we are now embarking upon our 2.0, we have got the garage system. We are probably as nimbler as probably any other fintech is. But the idea is that if at all they stay as fintech, they will be adopting to the newer ways of looking at the problems. That is something which we want to always consider.
Fair point. I understand that. Yeah, Ashish, you want to make a point?
No, I wanted to make a point. He made it later on, saying they are the fintech, right? Although, I mean, literally SBI has converted itself into a fintech, and I think kudos to the top management and also the middle management for doing what they have done to a bank which is like 200 years old, right?
Absolutely.
So for me, I have not seen many such transformations in the world. This is top of the line, and what they do with their applications across India is phenomenal.
And whether they are actually going to spin off YONO separately or not is of course the much asked question as well.
I must also answer that. I have said it on various earlier forms also. Well, YONO is a part of our distribution channel. How can you ask me to spin off a distribution channel? I cannot spin off branches. I cannot spin off my YONO, which is my distribution channel. So it has to be part of us only. But we will keep on investing into it. We'll ensure that it remains ahead of the curve. It should be better than many others.
Yeah.
And that is what our effort and endeavor is.
Yeah. Speaking about the future, and let's talk about the renewable energy transition that you spoke of, as well as the renewable energy bet, which you're also making. You have a green vertical. At some point over the next few years, do you believe that you will possibly IPO it or bring, investors on board for it? I mean, given the demand that you envisage, as well as the aggressive transition that's required.
I think that is a right conclusion, and why we should not monetize that. So maybe I think down the line in next 1 to 2 years, as we add up the capacity and further there is a pipeline of growth and further utilizing not only as the energy, but I think once the storage starts becoming the reality, means it is becoming the affordable storage solutions. This green energy will be having much more scope, and maybe I think down the line about, let us say, about decade or 2 decades, I think this may be even overtaking many other companies itself. And we would be definitely looking forward, and that's our thinking process, which is nothing secret in that maybe I think down the line about a year or two, then we will be going to be listing this arm anyway.
Okay.
So
an IPO in a year or two as far as the green vertical is concerned. That's the roadmap that you...
But we will be just going to start with a very, very small percentage, which is, I think, whatever the mandatory is. Because, as you know, that as of now, we are not constrained with the kind of raising capital. I think Mr. Khara is there, and we always to bank on.
Mr. Khara is always there for everybody.
But at the same time, I think to increase the shareholders' value and to maybe giving participation to larger public. I think that's the direction. Once we are going for public, I think there will be also the owner of the company, and they should be feeling proud that they are owning the shares in the green company.
You know, since we are talking about India's place in the world, and the assumption is that given the growth opportunities that we foresee, that India should lead growth. Let's talk about the export opportunity as well. Now, we've seen, even as far as the steel sector is concerned, we saw some big ticket global acquisitions happen, but then the domestic demand has been buoyant and robust, and so companies started to focus much more on the domestic market. But over the next 5 to 10 years, how do you see India shaping the steel sector, shaping output, shaping demand, shaping supply?
Yeah, so today India is the second largest producer and consumer of steel. I think for a foreseeable future, I see that India is going to consume a lot of steel. Therefore, all of us are focusing in terms of creation of capacities in India. Having said that, I think what would happen over time is that downstream capacities can be set up in the consuming markets worldwide, and the basic steel gets produced in India, and then consumption point to you create downstream capacities and then add value there and supply to the customer just in time. That's a possibility which could come over time.
Would that be driven by M&A? Would that make sense?
It could be a combination of M&A or a greenfield site as well.
Okay. Is that something that you're considering at this point in time?
No, nothing as such.
Nothing at this point in time. Since we are talking about the trends that will shape, the consumption story, of course, has been the big story that India, one of the big growth engines that India is driving on at this point in time. If we were to see the kind of per capita rise that is expected and estimated, what could that potentially do over the next 5 years to some of these sectors that we're talking about?
I think that story has already begun, and so therefore I talked about aspirational purchase. Ashish talked about real GDP on a PPP basis. India's already crossed $8,000. So these are in some way cusp points, and as people, and it probably crossed $10,000 in maybe 3 or 4 years. And these are cusp points, and as these cusp points get crossed, people's aspirations move away from basics into more upgrades of life, and then they expect as well better public facilities and better environmental products. And so therefore, I would think that India's focus would continue to be focused more and more on value add, and then less of a primary supplier to the rest of the world and more as a value added supplier. We are clearly globally competitive as far as the services sector is concerned. You know, we talked about how now the GCCs are contributing majorly to CAD uplift. We hope that with all the incentives of the governments, we would start seeing that in some of the manufacturing sectors as well. We already have world-class manufacturing in pharma, and then some of the auto ancillaries are probably world-class, and we'll probably start seeing that in other. And so therefore, just to sort of summarize this, I think what it means for all of us is continued focus upon being the best in the world, and setting those standards for ourselves so that we are as competitive as any other competitor. And I think both from a governance as well as from a cost standpoint, those are what our benchmarks are, and I think the digitization is going to just help us pass on those benefits to the customer.
Yeah, and the digitization is helping alleviate some of the concerns that we do have on the cost side as well, though not entirely, at least not as far as logistics, etc. are concerned yet, but the hope is that that will start to be factored in as well. Let's talk about the manufacturing story, because as I pointed out that you are a beneficiary of the PLI and you hope to start building that out. Over the next 5 years, what is the kind of potential that you hope to unleash here from India as far as the export market is concerned? You've got collaborations with HP and, with Google and others, and you are manufacturing for them here as well. What do you foresee that to result into over the next 5 years?
Okay, so before I answer this question, let me just add one point which Mr. Khara was mentioning in terms of SBI adopting the latest technology. I've been personally associated with SBI from 2000 onward on the technology side. And 2001 was when SBI decided to move from ALPM to core banking. That was the first bank in the history of India which decided with such a huge investment they have done it. But more importantly, SBI was always ahead of in terms of the technology curve. When our Honorable Prime Minister launched the Jan Dhan scheme, that was the time the chairman asked me, so this particular infrastructure, we wanted to take it to 2 billion account holder. And nobody in the world has ever thought that a single core banking infrastructure can scale, or you require infrastructure which can scale up to 2 billion account holder. We work it out, and today, let me share with you, SBI core banking infrastructure is the world's largest infrastructure running on those things with 2 billion. So always they have been ahead, and I know their transformation journey on and other things is its ultimate class, which probably many of the global banks have not adopted.
Well, that's great endorsement coming from you here. And of course, this is a story that should be told and should repeatedly be told, because otherwise I think that there is a perception problem as well when one talks about public sector, not just public sector banks, but the public sector in general. And I think that it is fair for you to make that comment, and I think that it requires an acknowledgement of the greater public as well, that there is plenty good that also happens within public sector enterprises and particularly public sector banks. And they can be thought leaders and tech leaders in this case, as you point out. But on the manufacturing side.
Okay, so coming back to on PLI, I think one of the disruption which PLI is going to be bringing is on the semiconductor industry. While we all understand, and semiconductor is the backbone of any technology and IT adoption, starting from your IoT devices to handheld devices or to any largest data center. And that was the one place where probably India has not done well. While on technology adoption, India was always ahead. Software technology development, we were all ahead. But semiconductor is something which we are behind. And if this PLI goes the way government is trying to drive in next couple of years, India is going to be the strongest base for the semiconductor technology, starting from R&D to development to manufacturing of those things. And most of the tech company are taking the advantage. And this is one of the reasons why I was saying that this quarter, India has become #1 in terms of the manpower deployment globally, because we have moved a large number of resources in the core tech side on the core development and R&D from the various parts of the globe to India. And we are seeing the same trend happening in the semiconductor industry and technology side. And over a period of time, we feel that this is going to really fuel the growth for next 10 years, the way we are saying. And as per the world estimate, and IMF has already made the estimation by 2026-27, India is going to be the third largest economy, global economy. And we feel that this PLI scheme, specifically in the tech side and in the semiconductor, is going to be fueling that growth.
Ashish, you want to make a point?
Just to basically buttress the point that 3 years back, if you read any newspaper coming out of London or US or magazine like Financial Times or Economist or New York Times, it was about how China's supply chain is out of this world. It is like no country can achieve it in the next 500 years type of thing, The supply chain is ultimate and India is clearly way below. And in 2 years' time, and it was basically for iPhone manufacturing, that iPhone how Apple has kind of fine-tuned everything just in time, and in China, that no other country can actually do that kind of high-tech stuff. And in 2 years' time, we are manufacturing 10% of iPhones. And I was like wondering, is it PLI, or is it Indians, or is it all together? And for me, that is the story of manufacturing, that basically you're fed stories which were basically PR in the guise of editorials, which was to keep us think that we can't do it. Now that whatever you call it, Atmanirbhar Bharat or PLI, or finally proof of pudding in the eating, that you are doing iPhone manufacturing increasingly every day, 8 to 10% already done. For me, that is the way I say that India has broken that.
I don't know if it's fair to say that we were fed PR. The fact of the matter is that we've had the aspiration of taking manufacturing from 15% share of GDP to 20% plus share of GDP. We haven't done it in the past decade. The hope is now we're at an inflection point and we will get past that, because a lot of things have come together, including the fact that there is a move away from China, so we have to acknowledge that and put that on the table as well, which we are beneficiaries of today. So I think...
No, but the fact is that it was being projected as if it cannot be done in India at all.
Sure.
And suddenly you are doing 8-10%.
No, absolutely.
Right?
That point is taken. But Mr. Khara, let's address some of the immediate sort of issues that we will have to contend with. As I pointed out, the amendments to the Insolvency Code, which are still pending. And more importantly, the NARCL, the bad bank. I know that the government is also asking banks as to what the status is there and what the momentum on that is expected to be.
Well, as far as two things, when it comes to the IBC code, I would say that it has gone through the evolutionary phase. There are not many countries in the history of all these geographies where the insolvency code has got stabilized to this extent in such a duration. The other important aspect which cannot be ignored is the fact that IBC code has created the ecosystem for resolution. IBC code also has brought in discipline among the corporates. It's no more a fiction that the control of an enterprise can be lost. It's a reality. So I think these are some of the intangible gains which perhaps cannot be ignored. Having said that, I must also mention that there is a continuous effort for evolving this code. There is a continuous effort in terms of bringing in the discipline for all the professionals who are involved into this, and if at all there are any sharper practices, they are very closely reviewed by the IBBI, and the necessary remediation is also initiated. The second question relating to NARCL. NARCL, again, all said and done, it operates in an ecosystem where some of the sharper practices of the legal system are still prevalent. And those are essentially in terms of the sharper practices adopted by various players who deal with the legal system. So I think with the passage of time, there is NARCL is also in a position to cut on those kind of time delays. And we have started seeing the traction. And also the other fact remains that there is a movement of accounts from the banks to the NARCL, and there are always issues relating to valuation.
Sure.
So these are the kind of things which take some time. But having said that, though it was a late start, but things have started moving.